Minister Jones says that this means the government's open for business when it comes to things like public PPPs. Could you just go into a little bit more detail about what that means?
We want to be able to invest to get ahead of the growth. One of the problems is that for too long we've been chasing along behind the growth, often decades behind, subjecting people to terrible congestion in our cities and then retrofitting with transport infrastructure at a very high cost years and years later. So we want to be ambitious. That means generating new sources of capital, mobilising new sources of capital to make the big investments. So for example, when we're talking about light rail and rapid transit, my expectation is that it's likely that some of those big projects will be done in collaboration with private sector through PPP models.
And how much money are you expecting them to bring in from this?
Well, it's too early to put a number on it, but we're talking about multiple billion-dollar projects.
I would say today, or shall I say tomorrow, I'm going to Australia, and the purpose of that trip, which is kind of on behalf of Grant Robertson and the Minister of Transport and Housing, is actually to look at their models and to bring a set of ideas back to both Phil and Grant. We need to configure ourselves better within the state so that there's less static when either foreign or domestic investors approach the state to play a role in our infrastructure turbocharging. Where do they go? Do they go to Mr. Goff? Do they go to Treasury? Do they go to the particular government department? So both the Treasurer as well as the Minister of Transport and Housing has said on numerous occasions to effect our sort of outcomes, we really want to search for innovative and great ideas that we can sell to the public, but also get cracking on overcoming this infrastructure deficit.
And have you had any conversations, or you as well, Mr. Twyford, about from any potential investors looking favourably at this sort of investment?
Yes, we've had lots of conversations, and there's a great deal of interest. And the message from our government is that we're open for business. So we're very happy to work with private capital to make these big investments. We also have to recognise that local government, who are such an important player in transport, simply don't have the balance sheets to make the kind of investments that are needed. And in our real high growth centres like Auckland, for example, we need massive investment, and you can't ask the rest of the country to pay the full costs of Auckland's growth. So yep, we need to tap into private capital for these big projects, but we also have to look at mobilising more revenue in Auckland, as an example, in order to get over the line.
So how will private capital get its return then on that investment?
Well, there's a number of revenue sources. So, for example, if we were looking at a PPP on one of these big projects, we would be looking to mobilise revenue through the council's normal sources, through land value capture, which is something we're doing a bit of work on at the moment, through fare box, through the normal getting a decent share of the tax take through the National Land Transport Fund, through road user charges, and then there are things like infrastructure bonds and other sources. So we have to find the right balance sheet for these projects. We have to find additional sources of capital and then find sources of revenue to support that debt.
Tolls?
Conceivably it could be, that's how it's done around the world, but we have no current plans to use tolling for revenue.
The government has ruled out using PPPs for many other projects, including prisons, housing, hospitals. Why is transport different? And does the Finance Minister know you're so keen on this?
As a government, we're not keen on introducing the profit dynamic into our schools and hospitals and prisons. We don't think that's appropriate. But we are open for business to work with private capital on transport and urban development and housing. There are huge opportunities. There's a world of cash out there that would love to invest in our towns and cities and in the infrastructure to support growth. We just have to make it easier for them to do that.
But surely they're only going to do that for profit as well. How is it different?
Yeah, so there's no free lunch. I'm not suggesting there's a money tree here that's going to provide a source of free private capital. So that's why you have to put together the revenue sources. But the other thing about transport infrastructure is that it's multi-generational. This is 100-year infrastructure we're talking about. It's nuts to try and pay for it out of next year's road user charges or petrol tax. We should be spreading that debt over multiple generations who are going to benefit from the infrastructure.
So why aren't you borrowing?
That's borrowing or debt is actually what we're talking about. So if you're talking about a PPP or a public partnership, or in fact the government potentially could borrow more. NZTA potentially could borrow more over a long period of time.
So what about Chinese Belt and Road projects? Is that something that you're looking at, that kind of investment?
Sure. So the Chinese government's Belt and Road Initiative really is about consortia of banks and infrastructure companies coming together for these kinds of large-scale projects that we're talking about. And yes, they are out there amongst a number of other infrastructure providers and financiers internationally who are in this market.
I mean, I would say that key figures out of our New Zealand infrastructure have already, I think, are currently in America. So that they themselves are looking for innovative ideas. And for example, one model that we're going to look at is about the transferability, for example, of the Scottish future trust model, which is going to test us because if we're going to get ahead of the curve in relation to water, and I'll wait until the results of the Three Waters study comes out, but boy, I've been really chastened by the Havelock North Water Report. Not so much the people that passed away, but the long-term health costs that have now come to rest on households as a consequence of crappy water. So as a politician, a father and a grandfather, I'm willing to look at innovative ways. Okay, how do we as a country better deliver water? What models should we look at, and what role is there for a mixture of public and private capital? I'm just horrified by the fact that a relatively well-to-do area, Havelock North, has been left with these costs. I perish to think what would happen in my own rohe in Kaitai or Kaikohe.
You mentioned that some of this would have to come from government borrowing, but local governments, a lot of them are up against their debt ceiling, and your government is committed to getting debt to GDP down to 20% by 2021. Where is this additional revenue going to come from?
So, as I said, there are a number of different potential revenue sources that you'd need to put together to support long-term borrowing. The question about the debt limits for local government is really a question of whose balance sheet the debt would sit on. And we intend to build on some of the work that was done by the previous government in establishing Crown Infrastructure Partners as a special purpose vehicle. It's a balance sheet that's not council, it's not government, it's kind of a public purpose hybrid, if you like. And that's one of the, I think, the keys to unlocking this whole area.
Your legislation around regional fuel tax allows every region to apply for a fuel tax, but you've just said in the speech just now you've ruled it out for the term. Why?
So we have ruled it out for this term in order to provide certainty. The legislation that's before the House actually doesn't allow any other council to put in place a scheme in this term of government. They can't apply for it. It can't be done in this term of government. So we've just drawn a line in the sand, made it very clear. We think Auckland is an exceptional case because of the years of neglect and underinvestment. Auckland has to get moving. That's why we've pushed Auckland to the front of the queue when it comes to a regional fuel tax.
Yep. These SDBs, they don't count against the government's debt track, and they don't count against the council's debt limit. So you could effectively borrow pretty heavily, and chuck it all in one of those, right?
Correct.
Isn't that a bit disingenuous though? Because the government did campaign on getting government debt down to 20%, and now you're saying, hey, look, there's a bit of a loophole here.
Well, it's not. The commitment that we made about the debt limit was about the core Crown debt. That's not to say that we shouldn't use our capital more efficiently and be more ambitious about mobilising additional sources of capital. One of the things here is that local government just doesn't have the balance sheet and the revenue sources to undertake the kind of investment that's needed. For instance, fixing Auckland's problems, that's a matter of national interest. We cannot stand by while Auckland is a drag on the nation's productivity. We have to get the city moving, and it's going to cost money.